What is going on, everybody? This is Andrew from DeFiancy. So we decided to make a little update video today. Sorry we haven't been that active in our videos over the last week or so. I've been waiting on some computer parts. We got a new computer in. Believe it or not, it actually is pretty computationally intensive to have all the software I run trading and streaming together. So appreciate the patience. We got this new computer ready to go. We've had a pretty big week in terms of a lot of just random things happening. Every week in crypto is pretty big. But let's talk a little bit about, before we talk about Tornado Cash, I actually want to talk a little bit about the markets, just kind of give you an overview on what's going on here. As you can tell, over the last 24 hours, Bitcoin has retraced quite a bit, relatively speaking, about 4%. We've had a couple of winners, not a whole lot, guys. And the reason is, and we'll get into this a little bit later, the market is really anticipating, I think, another decent move down. Okay, but we're going to get into that here in a second. So the big news this week was actually yesterday when the U.S. Treasury Department for the United States, obviously, declared a DeFi application called Tornado Cash, declared it or sanctioned the smart contracts that compose that protocol. A lot of people that are watching this video and a lot of people in our DeFiancy community don't even know what Tornado Cash is, so I'm not going to really spend a whole lot of time on it, but this is relevant to mention because this is basically opening up the discussion on really regulations on privacy. Because at the end of the day, DeFi and really just crypto in general is very much a privacy-based focus. There's a lot of, really Bitcoin. If you look at Bitcoin and a lot of the early developers and advocates, pretty much everybody, in the space was very pro privacy. And although Bitcoin actually isn't very private, it was intended to be. Okay, and so what I'm saying is we're kind of getting, I feel like we're actually coming back to home in a way where you're starting to see a lot of people within the community, talk about this situation, how we need to take it serious, which brings up the discussion, I think, from an investment standpoint, not financial advice. I do believe that as there are more crackdowns on the privacy side of crypto, that actually gives a lot of upside for some of these solutions that already exist. Some of them have tokens, some of them do not. But I think the privacy side of crypto is something we're going to talk a little bit more about, because I do believe that it's a missing component that hasn't really benefited very much from a growth standpoint. If you look at Monero, if you look at Zcash, so if we go to Monero right now, this is I would say the preeminent privacy coin of today. If you go to Monero, if it'll go, looks like my computer is going to freeze up a little bit. There it goes. Its market cap, so if I actually go back in time, you can see that it hasn't, it's had its moments, don't get me wrong. So in 2020, won the big bull market, but if you actually compare that to Bitcoin, it actually didn't really perform all that well. And it's still not, it never even reached its 2017 high in 2021. And what I'm trying to say basically is that privacy coins actually really haven't performed all that well. And I think that you are going to see more interest in these over time. And this is kind of, I think, an eye-opener for people that clearly there is a big use case of privacy in blockchain. And I just kind of want to throw this out here that you're going to see more and more. I'm trying to show you a graph. I don't know if you can see this, but here's a lot of the privacy-focused blockchains right here. Monero, Zcash, Dash, Horizon, Verge, Beam. Never even heard of that one. And you're just going to see more and more talk about these privacy-focused smart contract platforms like Secret, etc. But we're not going to focus too much on that. I want to really dive into the market here and talk about some pretty interesting things going on. I don't know why my chart's giving me this little data error here, but I'm about to zoom out and we're going to get a blank chart per usual. So if you look at this chart here, we talked about this in the last video. Okay, so right now we're on this 200-day moving average. This is like the critical level. I mean, this is like the dam. Like once this dam breaks, you're pretty much guaranteed to test down here at like 20.8, which is the POC of the entire range. I don't want to go too much into this because I think at this point, I don't want to try to make like very strong predictions or try to mislead people. I mean, I do have my own opinions on this, but you know, from a trading perspective, I'll change my mind when things change, right? But I will say this. A move down here really should not be that surprising, okay? And there's a reason why. Equities. So if you look at equities, this thing has had a massive move. So this is the NASDAQ E-mini futures contract. This thing has had a massive move up off the bottom here, okay? This is a very strong bear market rally, almost of 20%. Okay, on the ES, not quite as much, but at like roughly like 15%. Okay, that's a pretty big move. And if you look at this, you could definitely tell that this thing is, look at this big volume node here. This is obvious resistance, and you've already had a massive move up, but really for no good reason, other than the Fed said that they were going to be data driven. This move actually made a lot of sense to me before last Friday. Last Friday, we got the jobs data that came out, and it said that we increased, like the expected amount of jobs added to the U.S. economy was like 250K, and we actually added like over 500,000. Now you may be saying, isn't that good? Shouldn't the markets like that? The answer is no. The markets are looking for bad news when it comes to employment, because that will cause the Fed not to be as tight on their fiscal monetary policy when it comes to, or what I should say is interest rate hikes and their quantitative tightening schedule. But when the job numbers are good, it gives them the reason to keep doing it. And now they're backed into a corner because they told you they're going to be data driven, but yet the market went up on Friday, or it bounced after it initially corrected. And to me, that was a sign that this is getting very overheated. And I do believe that you are going to see a pretty significant correction in equities, at least probably to this area here, probably lower, to be honest, assuming that the CPI isn't all that great. People are expecting the CPI to be a lot better than it was last month. But here's the problem with that. It could be laggy. So although, yes, crude oil was lower in July, and I'm not an expert on this, so I'm not going to go too much into it, but I just think it's kind of logical that this stuff lags a little bit. And all it takes is for the CPI to be about where it was last month or higher for significant sell-off to happen. But I think the more likely scenario is that your CPI, by the way, this is going to be tomorrow, Wednesday, the CPI is likely to be a little bit lower, but not a whole lot. And I think if the job numbers that came out on Friday, if they were really poor, then honestly we probably wouldn't even be focusing. Well, how do I say this? If the job numbers were poor, that would have been very bullish to where even just a little bit of a lower CPI would have, both of those two things combined would have been really bullish for risk assets. But now that the job numbers are higher, meaning the Fed they can't really, they don't have a good reason to back off of their what they're doing right now with the interest rates and quantitative tightening. Because those numbers were higher, I don't think that a better CPI is really going to help all that much. I mean, it has to be a lot better, is what I'm saying. Like if it's just a little bit better, I don't think the market's going to care that much. However, with these kind of events, you're going to have volatility. You're going to have a lot of shuffling, positions moving around. So expect some volatility. But I think once the dust settles, if it isn't significantly lower, I do believe that you're going to start headed back. You're going to start heading back to this POC here, which is about roughly 21K. Okay, between 21.5 to 21K. I think that is like going to happen pretty quickly throughout this week. So again, not financial advice. I could be wrong on that. It's printing this bear flag. I've been saying this for several videos now, and I'm just going to go by, I think the obvious truth in front of us, which is we're printing a bear flag, and I am a big believer in these patterns. And equities is at significant resistance right now. And is it really logical for this to go back up to all-time high or go any farther? Not really, in my opinion. Now, once the Fed actually shifts its monetary policy right now, it starts printing more money, has what they'll call targeted assistance, basically reducing or maybe adding to the balance sheet. Who knows? That might actually, that could push us up to new highs here. I just don't think you're gonna. I think this is asking for a lot, what we got, but this is actually a pretty typical bear market rally here. Okay. All right, so let's move on here. I want to talk a little bit about DeFi. So the TVL, literally every time I show you this, we're like at about $40 billion total locked. Maker is still dominating. Uniswap, Aave, same old. One thing I want to mention is some of these apps in here are really, I think, completely off the radar, to the point to where whenever we do, and look, we talked about us having a big rally in DeFi tokens and stuff, and I do believe that comes. Problem is that should have already happened. And Friday, the data that came out with the jobs report, to me, that halted every kind of big move you could have had with risk assets, to be honest with you. Had those numbers, like I say, had that not happened, I would still say this has some upside. So I do believe that risk assets, including crypto in general, probably not going to do that well over the next few weeks. Although you could have a little bit of a pump if the CPI is, moderately better. However, I want people to get comfortable with understanding how some of these protocols work here, because we will come out of this. I really believe we are going to have a bottom get set here in the not too distant future, maybe within the next few months. By the end of the year, I think this will happen. And these tokens, when they do start to reverse and actually get some real traction, people get risk on, I think you're going to have a significant narrative with these. It's going to be interesting because you do have the merge over the next month. So maybe you do have a little side story, side pump with some of these tokens plus Ethereum. It'll be interesting because September, has been traditionally bearish for crypto, like remarkably consistently bearish for whatever reason. So we'll see there. But let me just give you an example on like the opportunity here. Okay. So I want to show you like a small one here that I know is actually pretty, like for instance, let's go with, I don't know, Sushi Swap. So Sushi Swap is a protocol. If you don't know what it is, it's like Uniswap. So it allows you to swap from asset to asset. So if I want to swap from Ethereum to wrapped Bitcoin or to USDC or any other token, I can do that, right? It actually has a pretty large amount of liquidity that goes through it every day. And I would pull up some charts on that. I thought maybe they would have one here. But what I'm saying is things like Sushi Swap right now, look how much they're down compared to where they were in 2021. Sorry, my internet. So if we zoom out here, this thing is down right now 94%. Okay. If we go to market cap, I think it'll show me market cap. Okay, yeah. Its market cap obviously down around the same. If it were to go back up to even, halfway here, I mean, you're talking like 5x to get, actually more than 5x, like 6, 7x to get like back to like half of its market cap. So what I'm saying is I want to show you guys these kind of tokens, and this is not financial advice, but I do believe when we come out of this, this economic, or what I should say, risk asset sell-off, the Fed reverses its policy, things like this will be life-changing. I mean, I think it's very easy to see how this would happen very quickly as well when you look at just how down these assets are. And something like Sushi Swap provides real value. Like I a lot of people use this. It's on a ton of different blockchains, and it provides an essential part of DeFi. Am I saying that it's the best DEX? No, I'm not. What I'm saying is it's probably worth more than $250 million. Okay. Not financial advice, obviously. But that's all I really want to show you guys today. Again, every video I want to go into another one of these DeFi tokens, because this is probably the best information, or the best opportunities when we get back into an upswing are going to be these tokens. I really believe that. And some of the alternative layer ones, which we can go into that maybe in another video. But until next time, friends, happy hunting.